What happens to the stock market and the economy if the US government shuts down? I know it sounds like a complicated issue, but don't worry. I'm here to break it down in a way that even your grandma would understand. So let's unravel this mystery together. But first, what's this whole government shutdown fuss about anyway? Well, it's like this. The US government, like any other organization, needs money to keep running. And where does that money come from? Taxes. But when politicians can't agree on how to use that money, or when they hit a roadblock in passing a budget, the government can shut down. It's like when your parents ground you because you couldn't agree on your curfew. Only in this case, it affects the whole country, so what's the big deal? Well, here's where it gets interesting. When the government shuts down, it means that many federal agencies and services are put on pause. Things like national parks, government websites, and even some public services can be affected. But what about the impact on the stock market and the economy? That's what we're here to explore. Let's talk about the stock market first. You might be wondering, Green Waifu, what does the government have to do with stocks? Well, it has more to do with it than you'd think. You see, the government plays a crucial role in regulating and overseeing financial markets. When it shuts down, agencies like the Securities and Exchange Commission can't do their job properly. That means less oversight and potentially more room for shady stuff to happen. So during a government shutdown, investor confidence can take a hit. When there's uncertainty in the market, investors might get jittery. And what do jittery investors do? They might start selling off their stocks, which can lead to a drop in stock prices. It's like a game of musical chairs, and when the music stops, nobody wants to be left without a chair. But here's the thing. Not all government shutdowns are created equal. Some are short-lived, like a brief rain shower, and don't do much harm. Others, though, can be like a prolonged thunderstorm, causing more significant disruptions. It all depends on how long the shutdown lasts and what specific government functions are affected. But let's talk specifics, examples from the past. In 2013, a shutdown occurred and the stock market didn't exactly throw a party. U.S. stocks dropped about 2.5% during those 16 days. And it's not just 2013. In 2018, there was another brief government shutdown, and guess what? The stock market did its nervous dance again. Now, it's essential to note that these downturns were temporary, like a rainy day in the middle of summer. The market tends to bounce back once the shutdown is resolved. So government shutdowns can ruffle some feathers in the stock market, but it's usually a short-term hiccup. Now let's talk about the broader economy, the one that affects all of us, not just the Wall Street big shots. When the government shuts down, it can disrupt various economic activities in a ripple effect that extends far beyond the government itself. First, let's talk about government employees. These are the folks who work in various federal agencies, doing everything from running national parks to processing tax returns. When a government shutdown happens, many of these employees are furloughed, which means they're essentially placed on unpaid leave. Others might be asked to work without pay, and that's like working a full-time job but not getting your paycheck at the end of the month. So what's the real-world impact? Well, let's look at some numbers. During the 35-day government shutdown in 2018 to 2019, around 800,000 federal employees were furloughed or worked without pay. That's like the entire population of a small city suddenly facing financial uncertainty. These folks had to make tough choices, cutting back on spending, dipping into savings, or even taking out loans to cover their bills. And when you have thousands of people doing this simultaneously, it has a noticeable impact on local economies. Now, let's talk about businesses that rely on government contracts. These are companies that provide various goods and services to the government, from building infrastructure to supplying equipment. When Uncle Sam's wallet is closed during a government shutdown, these businesses often see a drop in revenue. Here's a concrete example. During the 2013 government shutdown, government contractors lost an estimated $600 million a day. Imagine losing that much money every single day. It's like a financial hurricane hitting your business. Many of these companies had to delay projects, lay off employees, or in some cases shut their doors for good. And it's not just the big corporations. Small businesses that rely on government contracts can be hit even harder. But it's not just government contractors. Other businesses can feel the pinch, too. Think about restaurants and shops near national parks. When the parks close due to a government shutdown, there are fewer tourists, and these businesses suffer. During the 2018 to 2019 shutdown, it's estimated that communities near national parks lost about $1.8 billion in visitor spending. That's like the economic engine of a small town suddenly stalling. And let's not forget about the housing market. When government employees and contractors aren't getting paid, they might put off big financial decisions like buying a home. During the 2013 shutdown, the housing market took a hit. Home sales dropped, and real estate agents felt the impact in their wallets. As you can see, a government shutdown isn't just a political standoff. It has real, tangible consequences for everyday people and businesses. It disrupts the flow of money in the economy, leading to financial challenges for individuals, job losses, and economic slowdowns in communities across the country. But don't lose hope just yet. The good news is that not all sectors are equally affected. Some parts of the economy, like healthcare or tech, can keep chugging along even during a shutdown. And when the government eventually reopens for business, which it always does, there's often a rebound. It's like when your favorite show goes on hiatus, but you know it'll be back with a bang. So here's the bottom line. Government shutdowns can cause turbulence in both the stock market and the economy, but they're usually temporary. If you're invested in the stock market, it's essential to stay informed and avoid making hasty decisions based on short-term fluctuations. As for the broader economy, remember that it's a resilient beast. It can weather storms and bounce back, so keep an eye on the news, stay financially savvy, and don't let government shutdowns rattle your long-term financial goals. If you found this breakdown of government shutdowns helpful, don't forget to hit that like button, share this video with your friends, and subscribe to my channel for more financial insights. And hey, let me know in the comments what other money topics you'd like me to tackle. Until next time, stay wise and keep those finances in check. I'll see you in my next video. Goodbye, everyone.